So as you may know, within my private organization of Traders Society, we had identified an opportunity that a short-term reversal was coming on the SPY. So we decided to swing trade call options on SPY yesterday and sell today. My price targets in terms of my video yesterday were 384 to 385. That's where I was planning to scale out. I ended up selling way too soon towards open, but still managed to make a 5-figure profit. I also want to give a big shout out to one of the members within Traders Society for his consistency and discipline. Dimitri is a business owner who has his own businesses outside of trading, and he was trading part-time. He ended up scaling his account and he ended up outsourcing other people to manage and work for his business. So now he trades full-time and is averaging a consistent 5-figure week. This is someone who I'm planning to meet up with in New York of 2023. But I want to give a big shout out to him, man, because that is a very inspiring story to go from working full-time on your businesses to then trading part-time to now trading full-time and outsourcing the work on your businesses so you can focus on your best skill set. With that being said, let's get straight into the analysis. So what we need to understand is, in terms of the SPY, is this going to be a fake rally? Is this going to be a bull trap coming up where the bulls get trapped and SPY continues to drop lower to fill that gap below? Or is this going to be an actual Santa Claus rally where the SPY continues to go up? I'm going to show you how to determine which one it's going to be so you can capitalize off the bulls or bears taking control at our key trading levels. I'm going to explain to you what it is that I believe is happening as well. Let's get straight into the analysis. So what we're going to be going over is the SPY, and what you're looking at is a 30-minute chart on the SPY. And this is what I want you to understand in terms of where we're at on the chart right now. This is where we're at. This is a key level, and we're going to call this level a gap breakout. So what is a gap breakout? What you do is you find a stock that has a gap down. Once the market closes, take the high of day. So right here on December 16th, SPY ended up having a gap down. The high of day was $386.58. If it goes above that resistance level, pulls back and forms a floor support at or slightly above that resistance level, then the bulls are in control and the gap is going to start to fill above because there is no resistance. Do you see how that works? Now, what's the inverse? The inverse is it tops out at that key resistance level and ends up being a fake out and starts to drop back down. So let's get into this analysis. So here's what I want you to understand in terms of where we're at for the overall market. If you take a look at the daily chart, the SPY has a lot of previous support and it has a gap to fill above right around this gap right here at $389.63. If the SPY can break above this gap breakout at 386.58 and react as a support level, consolidate, form higher support, it's going to rocket to fill this gap at 389.63, which is a previous support level. SPY has cracked that previous support level, and it has had a very nice sell-off from that previous support level. So if SPY did react bullish at this level, a great level to be scalping put options for the initial reaction would be $389.63. Why? Because that's a gap close reversal where SPY fills the gap and it starts to have a reversal. That's also a previous support level that has not been tested, and SPY had a big sell-off from that previous support level, meaning previous support should try to react as a resistance level for the micro, right? So that's what I want you to understand. Now, in terms of how has the SPY been reacting to this level as of now? Well, it has been reacting as a resistance level. It has been faking out. For the bears to take control, right? So that's our bull theory. For the bears to take control, for the micro, what they need to do is they need to crack below the previous closing price. The previous closing price is nearly at the gap breakout level. If SPY stays above that and forms support, then it's going to try to go bullish and it's going to try to break out and fill the gap. Once it fills the gap, it's going to try to have a pullback. Now, if we just crack through 386.23 and turn that into resistance level, SPY will be on track to go back to support. Your support is at $385. If the SPY goes under 385, then you're going to see a nice sell-off to the next support level. And the nice sell-off to the next support level would be right around here at this $383 level. Now, this is another level that I want you to keep in mind of, and this is a more macro near future level. This is what we call a gap breakdown. So in terms of a gap breakdown on the SPY, this is your support. Find a stock that gaps up. This is the inverse of a gap breakout. Take the low of day right here. So when the SPY goes under this level, it's going to start to fill the gap below. And there's a gap to fill below at $380.54. So I kind of just broke down bull theories and bear theories and what would need to occur in that particular sense, right? So what do you know? You now know that the bulls, it's make or break for the bulls here. It truly is. It's also make or break for the bears. So the bulls are approaching a gap breakout level. They have failed to turn it into a support level, but they did come back during the close. So all the SPY needs to do is break above 386.62 and start to fill that gap. And we are very close and a lot closer to filling this gap above than we are closer than filling the gaps below, right? So odds are it's going to really try to push for that gap fill, but it needs to break out and form support. It hasn't been confirmed yet. It's been forming resistance. So the pre-market tomorrow is going to help you identify whether this 386.50 is support or is resistance. That's what it's truly going to do for you. If they can't push above this 386.50 to 387, we go to 385. If we crack 385, the bears step in and sell this off hard to 382.50, which is where you're likely going to try to see a bounce. If 382.50 cracks and reacts as a resistance, then it fills the gap at 380.54. What's the best levels to be trading at heading into tomorrow, knowing all of this information? This is what I want you to focus on. This level right here, $389.63. This is your best level to consider scalping a put option. It is a previous support level that is likely going to have a small micro crash, small micro pullback. Not saying that, Santa Claus rally is over or anything like that. What I'm saying is it's going to try to reverse and it's going to try to have a small pullback at this level if it reaches this level. So that's a great level to scalp a put. Not saying to swing trade, to scalp in and out. 389 puts, when they go out of the money, scalp in, scalp out, use confirmation, bearish roof, bearish confirmations, bearish candlesticks. What is our other key level? The previous closing price, this 386.23, this previous closing price. What we're going to do is we're going to draw another line right here towards this previous closing price, right? So this level, if the SPY goes under this level and forms resistance, it's going to go super bearish. It's going to try to crack 385, and we're going to sell back off towards yesterday's low, which would be profit target zones of 385 to 383 towards today's low, right? That would be another plan in terms of your put options, right? If it fakes out. Now, in terms of call options, what is your best price for calls? Right here, $380.54. There's a gap to fill below at 380.54. The initial reaction should be bullish. Look for a bullish initial reaction, look for a floor, look for consolidation. If you see it occur, then scalp calls. So your best overall levels would be 389.44 micro put scalp and 380.54 micro call scalp. Gap close reversals for micro scalps in and out very, very quickly. Look for the overreactions. Your more middle micro levels, your more make or break levels. So the SPY is in a situation where it's a make or break to fill the gap. If it cannot turn this into support, this 386.23 to 386.50, if that cannot turn into support, then it's going to hit 385. If 385 cracks, then it's going to go to 383. 383 to yesterday's low is make or break. If it reacts as a support level, we go back to 385. If it reacts as a resistance level and breaks down, we fill the gap below at 380.54. So what are some other levels that I'm interested in keeping an eye on? I'm going to keep an eye on this 385 level, which was a previous resistance level, which is now reacting as support, right? So the bulls are really trying to push this to fill that gap. They truly are. So I'm going to draw another one at or below. Let's see. We're going to do one right here. So at or below. Let's see. Where's create alert? There we go. Okay, so at or below this 385 level. And then another level that I'm interested in keeping an eye on is this 382.54 level. So what are my levels heading into tomorrow? Heading into tomorrow, our 4 key levels on the SPY are going to be the following that we're going to focus on. $389.63, the previous closing price, 386.23, which is right at the gap breakout level. 385 support, that's the 3rd level. Our 4th level is the gap breakdown level. And then our 5th level is the gap close reversal at 380.54. So in terms of strategies, gap breakout or gap fake out. Your job to identify if it's a fake out or breakout. As of now, it's trying to react to fake out. That's at 386.23 previous closing price. Make or break. Gap close reversal opportunity for puts, 389.63. And then another gap strategy is the gap breakdown. Once this cracks the lows and reacts as a resistance level, it starts to break down. There's no support and it fills the gap below at 380.54. 380.54, gap, close reversal, call opportunity to buy the dip. Initial reactions only. I had a member within Trader Society. He's a very good scalper. Some people have strategies where they actually make money scalping against the trend. I will do that sometimes, but it's not my strategy and it's not what I recommend for people. But he ended up scalping against the trend today. And I told him, if you want to scalp against the trend on SPY, instead of buying puts and shorting it at 385, because that was his plan to short at 385, I told him that was previous resistance that had already had a massive sell-off. So that move already occurred. So I had told him, if you want to scalp against the trend and buy puts, I told him what you should do is you should wait until the SPY goes back to a resistance level that has not been tested yet for the initial rejection and for the initial reaction. And that play that I gave him in chat ended up working out. I told him, wait for it to hit 386.58, which is the gap breakout level. And we were all aware, the trend was bullish. And we were all aware that if it breaks out and turns into support, then it's going to go super bullish to fill the gap, right? We're all aware of this. But I told him the initial reaction would probably be a pullback. Look at this massive pullback from this level. And it was never initially tested until today. So the key with key levels, write this down, is the initial reactions. The first time, meaning the first time it goes back to previous support, the first time it fills the gap, that's the special opportunity at 389.63. The first time where it's make or breaking out at this gap breakout level, the first couple times here towards this 386.50. The first time it goes under 385. The first time it hits 382.50, it's going to try to bounce. But when it reacts as a resistance, you could try puts at the lower level, right? The first time it fills the gap at 380.54. One thing with key levels I want you to understand is they tend to work best the first time. That's where the big overreactions are to occur. So what I'm telling you is in terms of high profitability odds, in terms of puts, it's very likely to see a small pullback if this gap fills. It's very likely to see a bounce if this gap fills the lower one, right? More oversold, the better for calls. More overbought, the better for puts. Best price possible you can be buying puts as a swing trader would be this $399.40 level. Highest gap, one of the highest gaps to fill above. Best level you could be buying calls as a swing trader would be right here, 374.13. Lower the level, the better. And then, the inverse for the puts. That's what I want you to understand. I hope that makes sense. And that's going to be today's lesson. We're going to absolutely crush it tomorrow. So basically what we're going to do is we're going to determine, is this a fake out or is this going to be a breakout? And we're going to take advantage of the move. Once we determine if it's a fake out or breakout, we take advantage of the move. Well, if you're doing puts, 385 to 383, those are the two levels you scale out. If you're doing calls, you scale out towards 388 to 389. What's our next trades after that? We're going to keep a super close eye on puts for 389.63 for the gap close reversal, previous support reacting as resistance. We're also going to keep a very, very close eye on a potential initial bounce at this 382. But if this cracks and reacts as a resistance, look to scalp puts at this 380.54, but be careful because it's a lower level. Also interested in calls at 380.54. That's the game. That's what we're going to do, man. I will see you guys tomorrow live at Market Open.